It felt like a long time coming, right, Chris?
Yeah.
We're talking about a Federal Reserve that's begun an easing
Yeah.
process. I think it's welcome news. I mean, we've had for 2 years inflation coming down, really stubborn for a long period of time. Labor market is still strong, but the unemployment rate's starting to rise a little bit. The rate of job growth is cooled. And so I think what we're seeing is a Federal Reserve that's trying to balance those risks by easing off the level of restriction, which means interest rates are high. Yeah.
The fact that the Fed has started in cutting
Yeah.
cycle and fairly boldly at 50
Yeah,
basis
bold. That's
points
bold.
with the explicit goal of stabilizing the labor
Yep.
market.
Yep.
And that's important for the economy to continue to expand.
Yeah.
And so I think the Fed's on the right track.
Yeah.
The world today is we have inflation and growth around trend.
Yeah.
And so the Fed is pursuing a path of normalization of policy, which gives them the best chance of extending the economic cycle.
And our forecast has, some turbulence over the next 6 months. Not a recession,
Yes.
but some turbulence, and trying to ensure that we have inflation anchored at that 2%. I think what we're saying for investors, listen, this is a good step in the right direction because the Federal Reserve is trying to ensure that the expansion continues.
Absolutely. And, what are we doing with this? What is our investment strategy here? And in the active bond funds, there's really two big drivers, really three if we think of security selection as well. But it's around what is our duration and yield curve positioning? Do we want to be more price sensitive or less? And with that, with the Fed starting a rate cycle, that we're biased to be long duration. And the second is on the credit risk that we take, or we overweight to corporate bonds, for example. And so that puts us in a position that we still like corporate bonds. So we are overweight to that.
So we'll continue to monitor, and should it change,
Yes,
you'll be the first to let us know.
absolutely, Joe.
And I'll do the same on the economy.
Exactly.